Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today is Friday, the 3rd of December, 2021. We do have the non-farm payroll later in the day, so I've put the link in the chat. If you'd like to join us for that. It's a live trade on a live account. Going to bring up our high risk investment warning. I'll keep this on screen for a few moments. Hey Michael, morning to you and welcome, and thank you to everyone for joining. And let's just go through to our market commentaries disclaimer. And just finally, our references. So I've got MarketScope 2.0, that's where we'll do the charting. And then CNBC, we'll just take a look at the morning note here. And excuse me, the European stocks are set to open higher, looking for a positive end to a tumultuous week. European markets are set to open higher on Friday, looking for a positive end to a tumultuous week following the discovery of the new Omicron COVID-19 variant. Shares in Asia Pacific were mostly higher on Friday, though Hong Kong was weighed down by tech stocks after Didi announced that it will start to delist from the New York Stock Exchange, and this is only 6 months after it listed. In the US, stock futures were muted in early pre-market trade, and that's because we're waiting for the non-farm payroll. Dow Jones consensus is 581,000. Different groups have various forecasts. I think the Reuters consensus is lower. Nevertheless, we'll just keep an eye on the Dow Jones and 581,000. Fears over the potential impact of the Omicron have abated slightly after scientists in South Africa, where the variant was first discovered, said existing vaccines should still offer protection against severe cases of COVID-19. All 3 cases detected in the US showed only mild symptoms. I'll just say, I know a few people that have it, and they are showing mild symptoms. So just a comment about that, and again, I want to make it up front. This is, opinion. I've got no skill in it, but in terms of my reading, as viruses have mutated in the past, they seem to have become less deadly, and perhaps that's what's happening to COVID. But of course, I don't know. It's just something that I came across in one of my readings. Authorities across the world are scrambling to contain the new strain, which South Africa's health body has said poses a 3-fold higher risk of reinfection than the global dominant Delta variant. GlaxoSmithKline announced on Thursday that lab tests indicate that its antibody-based therapeutic drug will be effective against Omicron. Along with monitoring Omicron developments, European investors will also be digesting final November PMI readings from the Eurozone and the UK, along with Eurozone retail sales. Eurozone CPI hit a record high in November. CPI inflation is expected to stay above the ECB's 2% target in 2022, but 2 central bank policymakers on Thursday maintained that inflation is transitory, and this is despite the Fed chair retiring that adjective earlier this week. All right. Lisa writes here, media heart. I'm assuming that's the Omicron. You're referring to Omicron there, Lisa. Sorry, I just saw your comment now. So let's take a look, and mild is better. Yeah, for sure. All right, let's take a look at the at the chart. And let's bring it across here. All right. Let's go through to the DAX. All right, we'll start off with a weekly and work our way down and see if that gives us any potential insights. Analysis on the weekly basis, I would suggest, has been fairly consistent over the past 2 days. So since Wednesday, I think we've kind of got a consistent picture here. And that is that after a heavy sell down, we seem to have found some sort of support here. Whether that holds or not is still to be determined. But as mentioned in a previous webinar, this range here, to me, when I first saw it, I thought, gee, that's going to make our job really difficult in kind of assessing the potential references where the swings turn. And the reason for that is long-ranged candles make the reference candles quite complex. They make it quite complex. I have mentioned it before, but I think that it's worth just bringing it up. This is what we drew yesterday. So let me just expound on this. So let's take this out and just let's make sure everyone's on the same page. So what we generally look for are reference candles. They're the same thing as swing lows, swing highs. I have seen definitions of swing highs and swing lows which I don't agree with, so we'll just use the reference candle conditions. And our 3 conditions, I think, are extremely useful. Where we try to find a reference low, then we want to see the candle move above the reference candle's high and close above it. Then we've got the 3 conditions for a potential swing. Now, when you get a long range, sorry, let me take that out. When you get a long range candle, the issue is the 3 conditions. The 3 conditions become extremely muddied. For example, here we clearly see the 3 conditions. Now, we don't know if the 3 conditions are going to lead to a swing or not, but we know that those 3 conditions are needed for a swing. So the identification of them, I think, is pretty useful. Now, let's just say we get something like this. Okay. Have we got the 3 conditions? So clearly, in case 1, we've got the 3 conditions. Do we have the 3 conditions here? And you can see the complexity because this is really the reference low, okay? Assuming, of course, we've got like sort of let's say a candle there, okay? So this is the lowest low in at least a 3 candle cluster. But because that's the reference candle, this becomes the high that we test against. But because it's such a long-ranged candle, the price action can sort of take place within here. Now we've got a complex situation. Well, is this a bullish? But the truth of the matter is, well, this is the true low. So this would be the obvious test. And it's so it becomes quite complex. And then only when we kind of break above here, now we can see the swing low is in. But it's taken a lot of candlesticks to do that, as opposed just to our standard 3. And let me show you a practical example which happened last year in the dollar. And we'll come back to the DAX analysis in a moment, but I just want to show you one of those complexities in action. And it was in the US dollar last year, around about September, if I recall. And let's just see here. this is it over here. So let me zoom in. See. Sorry. It's over here. Okay. This area here, which was, yeah, September. Okay, so let's just zoom in here. And here is, now we were in a downtrend for the dollar last year. And here's a long range candle. Here's the reference high. So now we're kind of looking for the the three conditions to suggest, well, this is now a rally in a downtrend. We can start looking to sell and or short. And there's the line of measure. But it takes 1, 2, 3, 4, 5, 6 weeks, or 6 candles after, so effectively 7 weeks for this to resolve itself. So there's a complex situation, as opposed to, say, let's see, this one, which is much simpler. Here's the high, here's the condition 2, 3, there's the swing down. So what I'm trying to say with all that sort of having been said, is that we were in real danger of moving into one of those sort of complex limbo situations because of this long range candle. And I think that price action has done a favor for us this week by actually creating another candle with a lower low. In other words, this is not the measure of the three conditions. This becomes the measure of the three conditions. We've still got to wait another full week. We still have to wait a full week before we would get the confirmation of the conditions. But if we get next week's candle that sort of is a strong blue candle and it closes above this week's high, well, that's the three conditions. That is what is needed for a swing. It doesn't guarantee the swing. Okay, there's no guarantees here, but I can tell you that without those three conditions, we're not going to get the swing up. So that is sort of what I'm looking for. In fact, we can say the risk of a swing down is still very much a probability, because we've got the swing. This is the reference candle here, confirmed by the long movement down. So the idea here is we've just got to watch this very carefully. By the way, there was a report again on CNBC. Let me see if I can find it. I think it's worth taking a look. I see some comments, Peter. Just give me a moment. I'm going to refer to them in soon. Let me just see. I just want to go back to the CNBC. No, I didn't see it in CNBC. Sorry, it's not yet. It was on Bloomberg. It was a Bloomberg a few lines on Bloomberg. Charlie Munger, who is Warren Buffett's partner and very highly regarded in terms of sort of his views on the market. He's already starting to mention about. He's already starting to mention overvalue. There's an overvaluation in the markets, or perhaps I think he said in pockets of the market. So in light of that, well, we've got the swing high here. See, we better watch that this doesn't continue sort of downwards. If there's any questions around that, of course, send them through. Shadrach just saying, asking if we can look at Euro US dollar, which we certainly can. Have to be aware of bending requirements or curve fitting. Yes. So I'm just thinking, clearly that's a terrific point. three conditions. I think this is what you're alluding to, Peter, so just correct me if I'm wrong, but the three conditions, we've always sort of been consistent. We're always trying to make sure we get those three conditions. And the idea here is we want to be as consistent as possible. Curve fitting. There is a way to find out if you're curve fitting, and I wonder if it applies in this situation. It possibly could. So when you want to do something, when you want to test a hypothesis, in statistics, there's steps to follow. I think there's something like 7 steps, but there's an order. There's an order to the steps, and the reason that you've got a specific order is specifically to avoid curve fitting. I've got to just think if I'm sort of keeping to those steps. Let me just give it some thought, Peter. I'll have to get back to you on that. But if you've got any other comments there, certainly type those through. So let's just take a look. So in other words, just on that curve fitting, the actual swing is to the downside. I think this is what you're saying, Peter. The actual swing is still valid to the downside. I'm looking to see if we get a contra to the upside. So maybe that's sort of a biased view coming in there. In fact, the stochastic here is still negative, and of course the RSI is below 50. So those are bearish. Again, I think this whole picture clears up only in a week's time, because if we get next week a sell-off like this, well, clearly this is the swing that's still in effect, isn't it? All right, let's go down now to the daily time frame, and we're still in this area of weakness. Let's just examine the last 3 candles. The way I want to do this is actually not on not with this overlay. I want to do it on this vanilla chart. This is what we did yesterday, and let's take this out. And let's take this out. So we drew in our these lines yesterday to test the likelihood of whether we are at a swing low, and the theory is as follows. We've got this candle here, which has a potential first condition. In other words, this is the highest high in at least 3 candles. We've also got a candle over here, which is a potential swing low. It's the lowest low in at least 3 candles. But neither one of these have resolved with the other 2 conditions. That's why we're doing these 2. Now, if we get price closing above this candle's high, then I would suggest we have a chance of being sort of at the bottom of this vicious swing. If we get price closing below this guy here, well, then that means we got to prepare for another potential sell down. So we kind of are stuck in this range, and we just got to see how it resolves. Yesterday's candle, by the way, is what we call an inside day. An inside day is a day of uncertainty. So there's the bulls were not prepared to take price above the previous day's high, but neither were the bears prepared to take it below the previous day's low. So really kind of an uncertain day. Well, let's see how today goes. We've got a quite a full calendar for today. So I think the way the candlestick ends at the close of trade today is going to be extremely useful in terms of helping us position for next week. Let's just go down to the hourly chart here. And the hourly chart's looking positive. Okay, so you've got a bullish cross of our exponential moving averages. You've got a bullish cross of our stochastic, which we use as a measure of momentum. And importantly, we've got the momentum measure at an extreme level. Now, extreme levels on the stochastic are not overbought. They're not overbought. They're actually where we want the stochastic to be, because if the stochastic can maintain a position at the 80th percentile, then, well, that means that prices are closing pretty close to the top of the range over the last 15 candles, because we use a 15 period here. So that would be a good sign. So we want this stochastic to stay above 80. We want to see angle separation with the EMAs. That would suggest that perhaps we are going to get a movement over here if, and this is the big deal, if the stochastic stays above 80, right? If the EMAs get that angle and separation, which of course means that we may move from the area of weakness to the neutral area, which of course is a positive step. Going from weakness to neutral is a step of positivity, and that also perhaps suggests that we found the weekly support level here. That's the meaningful level. But of course, just going back, we want to see the momentum maintained. And remember, we've got a busy calendar. I just got one more thing to say about this, and then I'm going to go to Euro-US dollar. These three zones actually, they do provide, in my opinion, they provide a fairly decent map of what the market's doing. It kind of cuts out a lot of the noise. If I go through to, let's just go to the S&P here. I want to go to the monthly chart. I just want to show you guys something on the monthly chart. And I'm going to go back all the way to, I think it was 2018. Let's just go to the monthly chart, 2018. That's my email address if anybody needs to email me. Yeah, it's over here. No, it's okay. It's here. It's here. All right, so I want to focus in on this area here. All right, so I'm not sure if you guys will be able to sort of recall what was going on here over October, November, December of 2018, but it was a horrific sell-off in the markets. And there was a lot of noise coming out in the media from all the camps, and there was one extremely well-regarded technical analyst who really said, you know, this is sort of the beginning of the end. There's a lot of technical damage that has been done. The point is that when we put an overlay of these three zones, and of course acknowledging that hindsight's 2020, but it does give us a good view of what's actually happening in the market. So yes, we hit zone 3, but zone 3 actually we closed well off the lows for this particular December, and then January we jumped from zone 3 into zone 2. So there's a positive movement going from zone 3 to zone 2, from weak to neutral. So whoever was buying here was buying what we call value. So this is kind of your value part of the market, and then it moved into the growth part of the market. So if you think about it like that, so this is clearly on a long-term scale. This is on a monthly chart, right? So now you go back to just the DAX and just go through to the daily. Well, sort of similar, but on a much lower, a much sort of closer time scale on a daily. Well, perhaps this is presenting us with some value. Perhaps it's presenting us with value. Well, again, only know in hindsight, but we can test it with these lines. Okay, where do we close? Do we close up or down? Because that's going to determine which one of these references the market's paying more attention to. All right, so let's just take a quick look at Euro US dollar as well. Okay, so let's go through to the weekly chart here. We'll do it top down. And let's take this out. Okay, I think you guys can see the peaks and troughs from the monthly, which will just smooth this out a bit more. You can see we've got this lower peak, lower trough. So from a very high level, you can see we're in downtrend. And of course, RSI is below 50, stochastics moving towards 20. We go through to the weekly. So clearly the momentum here is very strong to the downside. The one concern perhaps just is how oversold are we? So we did touch an oversold position here. It has corrected, so it has relieved some of the pressure, but it's just worth keeping an eye on that. There's no doubt the Euro US dollar is looking extremely fragile at the moment, but perhaps there is going to be some sort of rally that we can exploit. In other words, short into the rally, but we'll just keep an eye on it. If we take a look at the daily, again, we've got a similar problem here that we've been talking about over the whole DAX webinar. We've got an issue here with the range. Can you see the problem with the range here? So are we in downtrend here? You know, are we weaker or aren't we? Well, it's very difficult to tell because we've got a complex situation here because of that range. So this took place on Tuesday, Wednesday, inside. Thursday, inside. Today, inside. So until it takes out this level here, what are we doing? Well, what happens if we get a boost up this way? You know, I don't think that would happen. I'm a dollar bull at the moment, so I would expect at some stage lower Euro US dollar prices. But this range here is tricky. It's tricky. What do we do, right? Let's just go through to the hourly, and I think that you can see the S1 support coming in, and the S1 support. Now let's just actually put an RSI on the hourly here. Because we're not oversold. So I think what is a good level to look at, Shadrach, I think is the central pivot. See if the central pivot level is going to hold. Just remember, this is non-farm payroll Friday. I would expect lower volatility until that release. And then once that release is out the way, an expansion in the volatility. So just be aware of that. All right, Lisa, just writing, overshoot value starts to slide. So just explain that, Lisa. So so just with regards to overshoots, I'll tell you the previous slide. I'll answer it this way, and just let me know if this is what you're referring to. So by and large, and this is a hugely debated point. And the point, the question is, are markets efficient? Okay. So this is the question: Are markets efficient? Okay. Which is a very academic approach to the market. Are markets efficient? And if you look at efficient market hypothesis, there's actually three types of efficiencies. There's weak, there's semi-strong, and there's strong. Right. Now, within the theory of efficient markets is that markets are always going to be priced efficiently, dependent on information. So information's inefficient. Information is inefficient, but markets are efficient in pricing in the information, so they'll adjust as the information gets updated. But within the theory of efficient markets, there are anomalies that have been picked up by academics, and one of those. Well, let me mention two that come to mind, and there's probably a whole host more. But the one is that there is a anomaly of momentum. Okay, there's an anomaly of momentum. And then, but efficient markets say that will eventually be priced out. And then the second one, which is coming to Lisa's comment, is markets can overshoot, so past sort of the efficient level. So one of the places where we can perhaps talk about a market overshoot is actually the initial pandemic. So the initial pandemic, in hindsight, again, it's, hindsight sort of 2020, but if you go through to, just go back to the DAX, because this is the DAX webinar. So here's the overshoot down. See, there's no trend. Remember, trends are defined by peaks and troughs. So there's no lower peak followed by lower trough. This is just a clear overshoot. So, and again, hindsight's a beautiful thing. I think whilst this was going on, we were all absolutely petrified. And I have a story where I was listening to a fund manager on Bloomberg, and the fund manager was saying, well, this is the best buying opportunity he's seen in years. In other words, that portfolio manager recognized this as an overshoot. At the time, I was thinking, gee, this guy's crazy. But in hindsight, he was 100% correct. So overshoots tend to normalize. And I think that's what you were getting at, Lisa. I think that's what you were getting at. But so that's the the question is, okay, given the overshoot here, the obvious question is, well, is this an overshoot? And of course it could be. Of course it could be. But we will have to wait and see. All right, I think I covered everything. Did I finish up with the Euro-US dollar? I can't remember. Let's just go back there. Let's just take a look. Yeah, I think we finished this. I think that, Shadrach, we're just going to have to be mindful of it's non-farm payroll Friday. Just be careful of that. And of course, the central pivot is a very interesting level because there's lots of price resistance there as well. All right, I think let's conclude at this point. You guys have my email address if you need to get hold of me, and then please join me for the live NFP trade. We're going to kick off 10 minutes before the release. Thanks very much, guys.